Today in the grain market, soybeans fell. That Brazil production forecast is in question. It was originally holding the market up a little bit, but it really started to slip. The NOPA crush estimate is above expectation, as well as the bean oil stocks were below expectation. That would offer the market a little bit of support because that would indicate that there's some good demand. But at this time of the year, it's kind of up for grabs a little bit. The futures hit a 20.5 cent range. We had one bounce, then the market moved all the way back to yesterday's low at 9.81, and that's 88.75 cents lower for the last 15 days. Since September 30th, we were up at 10.69 3/4. So that was a pretty solid sell-off here. Option open interest added some calls, sold out some puts, but there's some liquidation in beans because the November expiration is coming right up. Right now, CVAL's at 19.2%, with the soybean oil at 34.4 and meal at 23.9. Corn today was a little bit higher. That basis levels did firm up. There really hasn't been much other news. I thought it might have had some pressure from the soybeans, but it really didn't at all. Yeah, it's harvest time that's marching on. And I think that the prices technically are kind of staying right in this same zone of $4 to $4.30, and still, even with soybeans down, it didn't hurt it that much. Right now, we were up 5 3/4 at one point. We got it to 406 3/4. Right now, CVAL for corn is at 19.7, so it's a little bit lower than it's been. Wheat is up. World production is still a concern. December dipped lower for the fourth day in a row. Then it rallied 12.25 cents. We got up to 587.5 right now. Option open interest has the market objective solidly between $5.50 and $6, and so we're still in between there. And until the market gets outside of that range, it looks like we may just continue to kind of bounce around and just move sideways. CVAL for the wheat is at 29%. This is harvest time, so anything can happen.